What's up, YouTube? My name is Ty, financial advisor. Welcome to my channel. Please like the video, please subscribe, and catch me every weekday after market close on the Smarter Gambling Show. So here's XELA, Exela Technologies. This finishes at $1.34 today. That is down 8.84%.
And it's gone.
So it's been a little bit since we last analyzed this stock. Back when it reverse split, it's been a really rough year so far, and today it got even worse. There was a reason as to why the stock went down so much today. The earnings came out yesterday in the aftermarket, and they were not good. So let's check those out real quick. So EPS was negative $3.22, which missed the estimate of negative $1.20. So a huge miss there on EPS, and revenue was $267 million. There was no estimate, so can't really comment on that, but that's actually down 9% year over year. So they're going backwards. So yeah, really bad earnings. And obviously, the market did not like it, and the stock is selling off pretty hard today. So this did make top 10 on StockTwits once again. This was number 8, had over 3,000 mentions. So once again, we're going to analyze it. All right, let's jump right in. Let's go ahead and analyze here. So first of all, this is a cup and handle in the making. Bottom of the cup being the low of 120, and there can be multiple possible tops. It can be $2, $3.60, $4.65, $5.25, or $6.85. And longer term, this is part of an even bigger cup and handle, where this has the potential to go all the way back up to 109 or even the high of 156. Although I do believe the most realistic top would be 360. But those are all bullish indicators. That is telling us that the stock should come back up to one of those tops to complete the cup. And then we have a quintuple gap down. First gap down is back here at 49.80. So that's a bullish indicator that is telling us that the stock should come back up to 49.80 eventually to fill this gap. Second gap down is back here at 39.20. So another bullish indicator that is telling us that the stock should come back up to 39.20 eventually to fill this gap. Third gap down is back here at $10. So another bullish indicator that is telling us that the stock should come back up to $10 to fill this gap. Fourth gap down is back here at $275. So another bullish indicator that is telling us that the stock should come back up to $275 to fill this gap. And final gap down was created today at $145. So another bullish indicator that is telling us that the stock should come back up to $145 to fill this gap. The $145 and $275 gaps should fill in the short term. The $10, $39.20, and $49.60 gaps may take a while to fill, but eventually in the longer term they should. And down here on the MACD, the moving average convergence divergence, the MACD line has officially crossed the signal line, so that is a bullish indicator that is suggesting that it may be time to buy. And here we do have a descending channel that has been forming for a couple months now. So right now the upper channel is at 210 and the lower channel is at negative 60 cents. So if this breaks 210 to the upside, that would be bullish. And if this breaks negative 60 cents to the downside, that would be bearish. And that's not even possible. So the descending channel is currently a neutral indicator, but it looks like it may go bullish pretty soon here. And if you guys want to follow along, the link to the chart is in the description down below. So right now this is sitting on the support of 135. Which it finished around today. So if this goes to the upside, next levels of resistance would be 140, 145, 155, 165, 185, 190, $2, 215, 220, 230, 235, 240, 250, 255, 265, 270, 280, 295, and then 305. There is resistance above 305, but we're not going to discuss that right now. And if this goes to the downside, next levels of support would be 130, 125, and then the low of 120. So right now at the current price, 134, the channels to the downside are pretty decently sized, so expect a regular amount of price action if this continues to run to the downside. However, to the upside, the channels get wider as the stock price increases. So expect a significant increase in price action if the stock runs to the upside. RSI is currently at 34, so not quite oversold and undervalued, but quickly approaching that. So this could be a good buying opportunity, not financial advice. And this did 16 million in volume today, which is way above the average of 3 million. So the sell-off today was confirmed by the volume. Okay guys, just my opinion, not financial advice. So the stock still looks really bullish in the short and long terms. Again, we have some very strong bullish indicators in the cup and handle, quintuple gap down, MACD, and low RSI. No bearish indicators, and the only neutral indicator is the descending channel, which may turn bullish pretty soon. So it's been pretty rough for the stock lately, but there is a lot of hope going forward. So therefore, if you want to go long, not financial advice, looks like a really good play. Not quite an excellent entry according to the RSI, but definitely an above average entry here. So again, in the longer term, this should eventually come back up to 49.60 to fill the gap there. And from the current price of 134, that would be over a 3,600% upside potential. So massive upside potential here in the longer term, and really shouldn't go too much further to the downside. This has already gotten beaten down very hard, and near the all-time low. So I would say going long at the current price, 134 would be a low risk, very high reward play. Definitely worth a shot, in my opinion. Really can't go too wrong here. So I can support going long at the current price, 134. And if it pulls back, then you can just average down at the supports that I mentioned before. And if you want to go short, I would not do that, and I would not recommend that. You could have went short literally anywhere above $2. And here at 134, it's a bit too late. You missed a lot of downside already, and there really shouldn't be too much more downside potential. Again, all bullish indicators right now, no bearish indicators, near the all-time low. So I would say going short here would be a very high risk, low reward play. Good chance you get squeezed out. If you want to go short, please do that at your own risk, and it would definitely have to be for a quick scalp. Get in, get your money, get out. But I really don't see why you would go short here. Seems like a really bad idea. So I don't like the current entry of 134. So honestly, you're better off just avoiding the stock altogether on the short side. So pretty straightforward, guys. It's been a pretty rough year and a half for this stock. Pulled all the way back from the $100 range to under $2. And today's terrible earnings did not help at all. But this is still a retail favorite. The apes are still in here, and the stock still does look very bullish in the short and long terms. Again, all bullish indicators right now, no bearish indicators. So if you want to go long, looks like a pretty good play at the moment. Not quite excellent, but definitely above average. Massive upside potential in the longer term, and really shouldn't go too much further to the downside. So I can support going long at the current price, 134. And if it pulls back, then you can just average down at these supports that I mentioned before. And if you want to go short, I would not do that, and I would not recommend that. Seems like a really bad idea. You missed a massive amount of downside potential already, and there's really not too much more downside to go. You'd be shorting for pennies here and exposing yourself to a lot of upside risk. So if you want to go short, please do that at your own risk. But I don't really see why you would do that. You're probably better off just avoiding the stock altogether on the short side. So sorry to everyone who lost money in the stock today, but this could be a good buying opportunity, not financial advice. And good luck to everyone currently in the stock and to everyone looking to take a position. This is XELA, Exela Technologies. Thanks everyone for watching today. I appreciate you guys. Please like the video, please subscribe, and catch me every weekday after market close on the Smarter Gambling Show. You apes already know, diamond hands to the moon. I'm Ty. This is Smarter Gambling. See ya guys tomorrow. Peace out.